Good evening, everyone, and welcome to the NGEN Markets training session for today. So, meanwhile, others are joining in. We are going to discuss the topic for today. So, the topic for today is portfolio review for your existing clients. So, here we will, talk about clients which are directly onboarded into your system via RTA connection, and then we can review them and we can make the portfolio reports out of them and all sort of stuffs in one single place. And then we will head over to the Q&A section. So after the entire training finishes up, you can ask your questions and either on the chat or either verbally, and we will definitely answer them. So I hope my screen is visible to everyone and my voice is audible. So let's head back to the terminal where we will start with our session. Just a second. So I hope this is visible to everyone. So whenever you're in terminal, if you want to review any of your clients, which are your existing clients, you can directly head over to the client section. So the client section is actually the sixth section in our portion. All you have to do is you just have to click on it and that gets loaded. Now there are a couple of things what you can do in the client section. One is the RT connection. So RT connection is where your ARN gets onboarded and all your clients are here in the left side. So in the left side, these are all your clients. You can see all your summary data once it is onboarded, and you can do certain sets of overview analysis in RT connection, section itself. So we will talk about some overview, like for an example, if you want to search the holdings of any of the client, let's say you want to know how many of your client are holding a certain mid cap fund in certain category. You can just type in the mid caps, let's say Aditya Birla. You can see Aditya Birla SL mid caps is actually having 9 clients and 46.3 lakhs has been invested. And you can also see the ISIN number. All you have to do is you can click on it and you can see these are the clients. And that is the data sets you get. You can sort it by AUM, holdings, and the holdings percentage. So holdings in thousands, lakhs, and crores has been given here, and you can also sort it accordingly. Now there are a couple of more things. This shows you the data sets of the top 5 mutual fund exposure in your AUM. Now what you can do is you can essentially click on this and see which are the clients which are holding them. So it's a pretty simple and a fast forward way to know that, okay, if you have 4.74 crore as iProve value discovery in your AUM, you can see these are the clients who are holding this particular set of fund. And this is very, very useful. And then we have given some, certain more statistics, like what are the top asset classes that you hold, what are the top AMC exposures you have in your AUM, and then the top 10 clients. So the top 10 clients are these clients already all together in your data sets. So these are the basic overview you can do in the RTA, but there are some in-depth analysis that can also be done. For that, all you need to do is click on any of the client. So let's say you go for any random client here, or either you can search a client as well. To search a client, all you have to do is just click on this filter clients, and you can easily type in a name like Sam Bedi and something like that, and you can see these are the clients which are satisfying the criteria. You can click on it, and this is how the portfolio gets loaded. Once the portfolio is loaded, you can definitely see the units, the values, and all the different sets of data sets here, which you can actually run the analytics on. So when you run the analytics, this is how the individual analytics look like for any particular set of client. So I will repeat the process again. If you want to load in any client, all you have to do is either you can click on the client, something like this, or either you can just search a client and then run the analytics. So it's a pretty straightforward way. There is another way, which is to load multiple clients. We will talk about this load multiple clients later on in our session. And you can also sort by. So sort by in ascending as per AUM. This is a very useful function. If you want to know those clients which are having the highest AUM, then you can just definitely do the descending and the ascending if the lowest AUM. So it pretty much gives you an idea that which are your top 20 clients all together in your system. And then you can click on that client and see what are the holdings, and you can run the analytics on the same. A pretty simple, straightforward way to, run analytics of any client. And now you can start reviewing the client portfolio. Now, these are all your existing clients. The data sets which comes from CAMS and Kavi through your RTA is actually onboarded through your ARN. And then you can analyze them based on the current holdings the client holds. So for an example, you can actually check a couple of things like asset allocation. So within asset allocation, there are certain sets of, sub buttons which you can actually take a look towards. We will take a look towards an overview where you can actually see that. For an example, if I click on detailed view, it will break down the equity and the debt as well. So if I click on this, you can see the equity and the debt. Essentially, the debt is broken down in government securities, uh, certificates of deposits, reverse repo, and all the stuffs in one single place. You can easily click on them, and you can easily see that what kind of GSEC the client is holding, and from this where this GSEC exposure is coming from. So to check that, all you have to do is click on this I button. Now you can easily see this is coming from IDFC bond fund. Whereas if you click on this reverse repo, you will see, the same kind of, structure, which you can see the exposure where it is coming from. Now this is very, very useful. You can click on even on equities to see, let's say what is, the ICICI bank exposure is 3.19. And from where this exposure is coming from, the cause of it, you can click on this I button, and that's how the exposure is. That's what your, our portfolio holds as per the fund, and the exposure for the ICICI bank, which actually sums up to 3.13%. So that is very, very useful. And the top three exposure which we have, when we click on this show all, it shows you all the top three exposures. So now you can see GSEC, including GSEC, we have the top three exposures altogether. So if we click on the concentration, we definitely see that we have a top three concentration as 33.26%. That actually adds up the three exposures in our portfolio, which is contributed by all these mutual funds. So if you have a very high exposure, it might be, a bit of a risk, because the entire 33% of the portfolio is relying on that particular set of three securities. And also we have given a couple of stats of top 5, top 10, and top 20 as well. So you can check this out as well. And then we have given the equity market cap exposure. So within the equity market cap exposure, you can check, the large cap, mid caps, and the small caps given here as of equity exposure. If I click on it, you can see the, exposures. Plus, you can also check the AMC exposure, which is very useful if the entire portfolio is highly inclined towards one AMC. In this case, yes, it is. You can see IDFC mutual fund, which includes two securities, is actually having, a very high inclination on the IDFC AMC. So, you can actually click on these bars to see what kind of funds these AMCs are holding as per the portfolio which we have taken into consideration, right? And you can also click show all accordingly, so that you can see the AMC exposure, and it is downloadable in Excel. So this all things are downloadable in Excel. Every single places wherever you see this blue button, you can download it in a CSV format, right? And then you can also check the types of the fund the portfolio holds, the equity sectors, which gives you an idea about, if the banking is the highest sector, what are the stocks in banking. So you can click on these, and you can see these are the stocks in banking, finance, IT, and the list goes on, which is also downloadable in Excel. And then the debt exposure. And the debt exposure is another place where you can actually see that if I have couple of debt funds. Now, in this case, there is one debt fund, but if I have couple of debt funds, it will actually show, the average YTM of the two debt securities or the three debt securities added into the system. Like you can see the average portfolio maturity and the duration. Whereas you can also, add in more funds. Maybe you can change it in the portfolio section and check it out. You will definitely see an average YTM to be different, because there are two funds added as a debt. So this is also available here. And you can also analyze all the debt securities here. So, all the debt securities with the ratings, you can download the exposures, the sectors are given here, and the credit ratings as per the, portfolio, or as per the debt exposure is also given here. So this gives us an idea about the concentration, the entire asset allocation of the entire portfolio of the mutual fund. And then you can take a look towards, the diversification. Now, the diversification is one case where you can look directly towards correlation. I'm just going to skip through some of the tabs to show the review. Then we can, go ahead with other tabs. In the diversification, there are two ways to check diversification. One is correlation and another is positional overlap. Now, positional overlap is not given here, but you can activate it here from the system. But to check correlation, all you have to do is just click on this. To click on this, and then you can see the correlations. The higher correlation basically is inclined towards 1, which is like 0.96, 0.95 as a number, and a lower correlation is in the equities space is inclined towards towards 0. So basically 0.5060, these are all the lower correlated assets between each other. How do we check the correlation? Whenever you see this 0.96, you can see the upper tab which shows you Aditya Birla, and in the left you see Kotak Equity Opportunity. So let's say you just want to know the correlations with Aditya Birla with other funds. You can just hover it down one by one to check the correlation for each of the assets. So that gives you a particular set of idea. This can also work out horizontally, but in a vertical sense, it gives us a proper idea, because you definitely can see that, okay, for Tata Equity, if I'm comparing two assets, I can easily compare that. So that is how this works out for correlation. And downloadable in Excel, you can have your own custom start date. Correlation is all subjective towards the start date and end date. You can just change the dates from here, to check how the correlation has been from 2015 till 2020. Let's say, for an example, we run this and you can see the correlation is changed now. Now, the SBI dynamic asset allocation was having a little lesser correlation. Now, in this particular period, it was actually having a higher correlation, right? So this is how, you can actually check for different sets of period. The period which is considered when you reset it, it's considered from the start date of November 2009. So you can change the dates from here as well. This will change the dates for the entire analytics, whereas if you want to change only for this correlation matrix, you can change it from here. So this is one single place. Another is positional overlap, which you can easily activate from the compare tab. Now, all you have to do is just click on this compare button. It takes all those 10 securities into the compare section, and then you can check the position overlap. Now, position overlap is another place which shows you that between the two funds, what are the underlying overlapping securities. So you can see between L&T India Value Fund and Kotak Equity Opportunities, there is 41% of overlap. You can easily click on it, and you can see the stocks and the securities which are overlapping. So this also includes the debt securities as well. If you add in some debt securities, you will definitely see some overlapping there. And this is how this works out, which this entire matrix, if it is very big, you can download that in Excel to check the matrix in an Excel format. And then we have also given some overlapping position. So if there are some securities which has position in all the funds, then it will definitely get listed here. In this case, it is not. So that's why it is not actually showing it up here. So let's go back to the client section again, which we have activated for the portfolio review. So first thing is that you can actually review the correlation. Second is you can also review the positional overlap just by clicking on this compare button, right? Once you're done with this, you can check the two tabs, which is contribution and stats. So let's say you want to remove one of them. Like for an example, we have taken a look towards Kotak Equity Opportunities and Aditya Birla Sun Life. We would want to keep one and discard one from the portfolio. So what we can do is we can just check the contribution. We can check the start date or the end date here as well. And you can also directly see the return contribution for the securities from the start date of the entire portfolio analytics. Whereas you can change the start date and end date just like correlations. You can reset it, run it, and then you can check what kind of contribution towards return every single securities has given in the portfolio. So in this case, IDFC bond fund. But one thing to be noted here is that when you click on IDFC bond fund, you will see the allocation is high towards in the portfolio. That's the reason there is a high contribution towards return. So like for an example, if we check SDFC, the allocation is just 8%, whereas the contribution is 18%. That is where you can see the contribution is truly high with this particular set of fund in the portfolio, and you can recognize that for every single security. So we were talking about two funds. One was Aditya Birla, and other was basically Kotak Equity Opportunities. So once we come back to the contribution, you can actually see where Kotak Equity Opportunities is. So it is in the bottom corner. So now it is your call to take that which fund would definitely be more sustainable in the portfolio. You can actually remove them. To remove the funds, to do any permutations and combination, you cannot do that in the client section, because this is a directly automated section. To do those analysis, you need to actually add that portfolio to the portfolio section, and this is where the complexity starts, where if you want to make a copy of it, this Rakesh Kumar as a portfolio, and then make some changes in allocation, do some permutations and combinations, and come up with something modified portfolio, then all you need to do is, first step is to click on this. As this already exists, it gets copied in the portfolio section as a client's portfolio. So you will see one folder here from clients. This is the folder where from all the clients will be onboarded, whichever you select, into this section. So you can see there are a couple of clients I've added already before, and these are all the clients which were added from the client section. So this section, I've just clicked on this button. That is how you can actually add them to the portfolio section, right? Now let's go back to the run analytics. I hope my voice is audible to everyone. uh, when we take a look towards a couple of other stats, like the performance of the portfolio, we definitely have performance in mind whenever we look to the performance, like what has been the performance from the start of 2010, or last 7 years or something like that. So let's say we go for a last 5 year period. You can easily do that just by changing this. We have given this change button, you can change that, or you can also select a minimum common period. A minimum common period is basically the uh, it will take into consideration that particular set of date which will have the inception of the youngest fund in the portfolio. So that is also a very good use case. And then you can use easily start with the performance stats. So in the performance stats, here you can analyze for the last 5 years, this particular set of portfolio has not beaten the benchmark. The benchmark here considered Nifty, reference index 6, which is 50% Nifty, 50% CISL bond. The consideration here is due to the asset allocation in equity and debt. And here you can see the differences between the performance, the assets, and the benchmark. We are not going to talk about performance a lot here. We are just going to review a bit, and then we are going to take a look towards the report. But the initial importance here is that whenever you're taking a review towards a portfolio, performance does come to our mind, and we would definitely want to take a look towards the risk. And in this particular set of the risk, you can definitely see that if I take a risk, like in the confidence interval, when we see the historical value at risk, right, there's a 5% chance that we could have such a loss in a probabilistic way, which is negative 12.55, which is similar to the benchmark here, by the way. But when I change it to 99, you can see the uh, we have actually lesser loss than the benchmark, but we do not perform against the benchmark altogether. Our annual return set is definitely not higher against the benchmark. So in a cumulative sense, we are not performing. We do not have an alpha against the benchmark, the benchmark we have chosen. You can change the benchmark from here, and you can check some relative stats as well, which is very, very useful. Because whenever you're reviewing your existing client portfolio from a longer period of time, you can easily see that from the last 5 years or from the last 10 years, this is what the historical backtest it has been. Right now, this will help you to take a decision as to should you keep this portfolio, or should you make some modification to the portfolio for the next couple of years. And that is how you can take a call against the decision, uh, uh, on the decision what you have taken. And one important thing here is that this is an alpha, which is basically annual return over the benchmark. Tracking error just shows us that how different are we against the benchmark. It is just difference between the standard deviation of the difference of the daily returns between the asset and the portfolio. And there is info ratio. So a negative info ratio suggests us that we might be different than the benchmark, but if we are negative, then we are, negatively different. So an info ratio which is lesser or negatively, inclined is not a good sign. So that is, a very use case, a good use case, and you can also check the capture ratios. And this is a very good use case that within the up capture, when the market goes up, when the market performs, we do not perform as much as market performs because it is lesser than 100. The ratio is lesser than 100. To check this ratio, all you have to do is click on this I button, and you can easily see that the benchmark has performed better than the asset even in the monthly sets. These all months are the up months when the benchmark was up, which is positive. And you can see, within the, behavior of the benchmark, what is our return behavior of our asset. In April 2020, we had this performance in the benchmark, whereas our asset, which is our portfolio, is 7.63. Even for the down capture. Now, if a down capture is more than 100 as a ratio, that is also not a good sign, because if you see this, you will definitely say that when the benchmark falls, we fall more than the benchmark, right? So here in this monthly return set, you will see, in some certain periods, we are falling more than the benchmark. And that is the case. Like in March 2020, when we had a fall, we had a huge fall against the benchmark, which had a fall of negative 11.15. And then there are some monthly and yearly stats which gives you some figures that, when we were positive, how many months we are positive and how many months we are negative, whereas how many years we are positive and negative. So it gives you a good overview, performance review of a portfolio. Now what about the expected, return? Because these are all point to point, you can change the dates, and you can easily, see the change in the performance and the, CAGR and the annual return and the volatility as well. So for that, the very good solution is rolling analysis, because rolling analysis gives us an idea that let's take this date a bit behind. Let me just, get it to 2013, so that we get a better range. And once we check this, range, you can actually check the rolling analysis from this particular set of date, which is this start date. And for a 1 year period, let's say we make a hypothesis that every single day we invest for a 1 year period in this portfolio, we would get such a data point, right? Any data point you just choose to, stop, like 31st July 2017, which is 15.39% as a return. This shows you the sum of the previous 260 days daily returns. So every single data point shows you the similar, the return sets, and the return sets are changing variably. Now, if they are changing, what is the average of these all return set, which is 11.93? So you can effectively say that, for a 260 days period, which is 1 year, working days in a year, the average return of this entire portfolio is 11.93%, right? The volatility is, this is the volatility, which is rolling volatility. And this is as high you has, there's one period which you have actually seen a return set of 41.43. You can actually point that out. You can just, get ahead with 41.43 somewhere in this particular set of the data point. And there's another period where you have, actually gotten a loss of negative 16.30, which is a 1 year period. Now, this is on the absolute basis. So you can see that the change in 520, which is a 2 year period, and the 780, which you can also change from here. You can make it 1300 for a 5 year period. So let's say you're considering a use case where you're going ahead with 1 year, 3 year, which is 780, and also 5 year. Now 5 year, which is 1300, and you run this. Once you run this, you will see that, how the volatility actually increased in this particular data set, whereas your low has decreased and it has become positive. So effectively for a 3 year period, the low becomes positive. So any particular data point, whenever you start from 2013, every single data point is in positive, which shows you the sum of the previous 1300 days. I'm talking about 1300-day rolling return. So for a 5 year period, right? And you can even analyze this. So if you analyze this, you will definitely understand that this might not be a good case to go ahead with a 5 year period, even if you're positive, because you're not getting a better average return against a 1 year period. If you're, inclined towards risk, taking risk, you can definitely go for a 1 year period. But this is how you can, take decisions on what kind of period you can go ahead with such a client for the longer point of a time. If you're going for a longer run, is the annualized rolling returns getting increased in the average rolling returns or not, is the question. That is what you can take a look towards, right? So this is a very useful scenario where you can take a, rolling analysis in the perspective of reviewing any such a portfolios, and then take decisions that how long should a portfolio be, taken into consideration, right? So this is one, parameter which you can look towards. There's another distribution which I'm not going to talk a lot about, but this is a very good way to know that if these data points are making sense to you for a 260 days period, you would definitely want to know that how many percent, or how, what is the frequency of data point coming between these two return intervals. The two return intervals can be defined by you. Like for an example, let's say you want to know that between 10% till 25%, what are the frequency, what is the frequency, which is 37.47%, which is actually a probability. So you can see the frequency between these two return intervals for a 1 year period, which is 260 days, which you can basically change, because this is all flexible. You can change this accordingly, it changes here as well. Plus we have given rolling volatility, which gives you an idea that, if the volatility is always gonna change, then how it is changing from the last, 2013 till today, right? So you can actually take a look towards the rolling volatility gives you an idea that as the standard deviation for a 260 days period, that as the time changes, the standard deviation also changes. And what is the average standard deviation of this entire portfolio, which is 8.31. And there you can see there is another period where standard deviation was very high, which is the period of COVID. You can see the crisis. When the crisis hits, the volatility of every single security increases, which in turns increase the volatility of the entire portfolio. Now, this is a very good use case. You can actually take a look towards, even for a 2008 crisis. Whenever you go back, you can definitely see, in 2008, how the volatility has shot up in that particular time period, right? So even in 2016, the volatility did increase, in the period of demonetization. So this is how you can actually take a look towards any particular set of a portfolio on the basis of performance and the risk. You can check rolling analysis, and you can also check risk by drawdowns. Drawdowns is a one, useful way to give you an idea about what were the losses in the portfolio. These all gray areas shows you the losses and what are the days to recover. Like, 106 days for the worst loss we had in the portfolio, just took 106 days. So this recovers very pretty fast. So you can see the losses, the audacity of the loss, and the days it took to recover. So these are the couple of things you can take a look towards. Now we are just gonna take a very interesting step here. I mean, I would like to show the manual data as well, because we've observed that many of them have not taken look towards this particular section. You can easily add in, as you are done with the review of any portfolio, if you want to add in a data set of any client, by adding some units and the values, you can do that in this particular manual data section, which can also become your own repository, own system, where you can add in, even your prospective client if you want. So all you have to do is just click on this add client. Only thing is required is name. So I will just type in a, random name, just like my name, and just a PAN number, right? And an email.com, right? So this is what, you can add in. You can add in all the other details as well. And once you click on this add clients, you can easily add in, particular sets of funds and stocks with the units per share or the current value. I'm just going to demonstrate that. If I add in any particular set of fund here, like HDFC balance advantage, okay, right? So once it is added, you can easily see, both of the funds are added, and all I have to do is either type in the units or either enter the, current value of the particular set of the fund. So for an example, if I type in units like 2000, the current value directly reflects. And if I type in a current value, let's say 12 lakhs, right? The units per share will directly reflect. So this is how this is what my holdings are as of now. I can type in a stock as well. Let's say, um, HDFC Bank Limited, right? Once I add in that stock, I can enter the units. Let's say 100 units I've taken. This is what my current value will be. And once I click done, the portfolio gets added into the system. Now you can easily run the analytics similar to what I've shown you before for any particular portfolio which you are running for from an RTA connection. So every single, you can even search the clients here. You can see so many clients we have added already. So these are all manual data which you can also add and you can also analyze, which also includes, all those exposures and all those stuffs. You can click on it. You can recognize some of your perspectives here if you want. It's a good set of a manual data entry which you can use, and this will be very effective if you want to keep another data sets uh, ahead with your ARN number, right? So these are the couple of things which we wanted to show you for the particular session. Another thing here is that you can also load in multiple clients. Now multiple clients is given here in the system. All you have to do is just click on this button, load multiple clients, and then search a family, right? For an example, to search a family, you can just type in the surname of a family just like this. You can click on any of the members you want to include. Let's say I'm including 5 members or 4 members. I'm done, and then I can just write it Sharma family, right? So once I type this in, I can click done, and I can just run the analytics. So here you can run the analytics of the entire Sharma family, and you can create reports. So I'm in this particular set, you can easily see that if you want to create a report of a Sharma family, all you need to do is click on this PDF button. You click on the PDF button, a seamless PDF report gets generated. You can open it, and I will just show you the PDF report. We have reviewed a couple of things in the analytics which will show you this report. So this is the report which we have generated from the NGEN market system, and this will include the Sharma family altogether, right? So the drawdowns, the rolling analysis, all those stuffs are easily given here, and also the PowerPoint report. So PowerPoint report will also include the name and the amount which you have taken into consideration. All the 5 members with their AUM added, you can create a PPT out of, and it will show you one set of a portfolio with Sharma family with the particular set of asset allocation. So accordingly, 33.79% of iProve value discovery is allocated in the system. So what it accounts for the entire capital, it accounts for 56 lakhs. That is the power of this section where you can actually generate certain sets of PowerPoint reports which are all customizable. You can change the colorings and all the stuffs, make a proper set of pitch book in front of your client and send it to them. This is a proper presentation you can actually present to the client, a very seamless presentation which actually includes lakhs of rupees, lakhs and crores as a terminology in amount. And these are all asset allocation. You can see the equities, even in the position concentration. You can see the top 10, top 20, and top 5 actually are given in lakhs. So these are all figures in lakhs. So basically this is a capital based PowerPoint report which is given here, and this is also there in the equity sectors allocation as well. So if you want to answer a question, what is my exposure in banking in lakhs? My exposure is 28.60 lakhs rupees. So that's it. So that is how you can actually, give a proper set of capital based report to any particular set of client, right? Now, this is one use case. Now, let's say you want to actually share it with the client as a link. You can easily do that as well. And basically this link runs for 7 days. You can copy this link and share it with the client. So you can even do it for an individual portfolio, and you can also do it for a multi portfolio which we have added. So this is a consolidated portfolio. Once I click enter, but you can see this Sharma family is actually added into the system. So whenever you want to show a portfolio to this particular set of a family, you can use this link to show the entire set of analytics. Plus you can create a PDF position, print your position list, which is this positions, and the PowerPoint report in one single click. So this is this is what you can use through consolidation of any particular set of portfolio in the system. And one more important thing is we have already given this as an update. There are two updates which we already had. One is the compare section in the compare portfolios. Now you can also load in your RTA clients. Now you can see this search clients or portfolios. This actually means you can actually search from the client section, right? So let's say I'm just talking about one of the Sharmas here. So whenever I type in a Sharma, you can see all my RTA clients are given here. So I don't have to copy them to the portfolio section again and then add them to the compare portfolios. All I need to do is just search for that particular set of a client, and this is what you can click on Sharma, and this is the portfolio. You can also add in another client, let's say any such client like Sam Bedi, right? So RTA client. So you can compare two RTA clients if you want, or a model portfolio or a client, which actually depends on what kind of portfolio you want to compare. This is a very important functionality which will be easing your process once your clients are added into the RTA section. So this is one thing. Another thing is in the compare itself. In compare securities, you can also search the portfolio for a client. Now, this is very, very useful. Let's say I'm removing this and I just want to add a Sharma, and I want to see which Sharma, I want to see some position overlap for some of my clients. I can easily do that. Let's say Vishal Ahuja. I click on it. Okay, this is just one fund. I'll just add another client. So let's say, yeah. So let's say Kunal Sharma. Okay, there's another. Let's say we add in another client. Okay, let's say we add in this RTA client, and you can see these all funds are added into the system, right? So you can easily do that from this particular set of search button. It's very, very useful, because now if you're done with your position overlap, if you think this is great, you can add in another client like Rakesh Sharma, and you're done with it. So I'm just talking about the RTA clients here, Rakesh Kumar, and add it into the system. So it gives you an ability to take in any portfolio and compare it in one single shot. So comparing underlying securities, so you can compare some position overlap, risk versus return in one single place, and this will ease your process. And you can also, by the way, create a compare PowerPoint report. So if I'm talking about this is a portfolio of Rakesh Kumar, I can click on it and a PowerPoint reports get created. So everything is interlinked in our system, interlinked. So what whatever you see in the client section can also be onboarded into the compare section, which gives you an ability to create a comparative report uh, of the securities easily. So this is a compare report. I'm just displaying it to you, and this is the compare of the underlying securities. So this includes all the comparisons of all the return parameters, risk versus return, and position overlap, performances, and all the stuffs here given here, like calendar years and even rolling returns. So within a single, within one single click, I can easily compare portfolios. I can easily, add in couple of securities and compare them. And I can also create, customized portfolio reports in the client section by just one click. So that's how it works out. There are a couple of things which are also left out, is that one is a client link, which is a mobile based link. I recommend everybody to take a look towards it, because this link is very useful. You can share it with any particular client. You can add in a phone number, like for an example, any random phone number, you can add it. Once you have added it, you can create the client link. You can set it as a client generate pin. This is how the client will view the mobile based link. And it's very useful because you can easily see that in a mobile version, a mobile based version, and you can create the client link and send it to the client, right? And once it is sent, the text will be sent something like this. This will be the text format, and it will be sent to the client. You can copy this text, by the way, send it to any other medium like WhatsApp or email a mail, and that will work out pretty much fine. And if you want to manage the mobile based link, all you need to do is click on this client links. This is where you can click on this, and you can manage and activate or deactivate client links easily from here. So let's say I want to, deactivate some of the client links. I can easily do that. I can click on this and I can see that, okay, this is, not valid as of now. So if I want to, activate a link, I just have to click on this. I can see the Sharma family is activated. I can even change the client link by changing the benchmark from here. Like, let's say I want to consider some other benchmark like Nifty 50. I can consider that. I can, click as, percentage of AUM, change the pin as 0007 and date it, right? Once I have updated it, all I need to do is just type in 0007 and it is authenticated. So this is how my client will view the data set of their, particular set of analytics. You can see the analytics is given here. I'm just gonna make this as a full screen. Just a second. Okay, I hope this is visible to everyone. So you can see this is a portfolio altogether with particular set of exposures. Whatever we have given in the analytics is also given in the, this particular set of a mobile based link, which is a drill down approach we have given here. And pretty much you can also see the markets, NSE and BSE, and you can also connect. So basically a client can connect with you. Just he can write this is good, and you will receive a mail on your registered, email ID. So this is the registered email ID. You can send the message. The message is sent. So that's basically it. That is how you can manage the mobile based link. And this is all for the session for today. We can start up with the Q&As. So anybody, if you have any questions, you can please shoot your questions.
Yeah, hi. This is Fatima here. Are you able to hear me?
Yes, ma'am.
Yeah. What I wanted to know was, so when I run the analytics and check the performance of the portfolio, and if I see, if I want to make some changes, is it possible for me to do a, replace a scheme with another scheme to see how the performance would have looked?
Yeah, hi, this is Arunabh here.
Yes, sir.
So yeah, you can, if you want to edit a client portfolio, you have to do one additional step. So when you load the client, if you want to change this, there is a button here which says copy to portfolios. So it basically makes a copy of this client and takes it to the portfolio section, which is the very next section. And here, you can just actually collapse the folders. It's very easy to get from there. There'll be automatically you'll see a folder called from clients, and that's the client we just copied over. Now this one you can actually edit.
Oh, so I can replace the scheme to see how it would have performed
Exactly.
if I had not chosen a particular fund and chosen some other fund.
Exactly. In fact, we can show you, Umer, just remove one, rescale, and then just quickly save it. You don't even have to run it. Just rescale it and just update it.
Okay.
Okay, so that's a portfolio we removed on scheme. So Umer, if you could go back to edit again, and yeah, and then click the update button. So we actually save the changes here. Okay, so we've saved them. We can now actually go to the compare section if you want to see the difference. You can compare two portfolios. On the left hand side, we can actually load Rohit Sharma from clients. So that one. And then on the right hand side, yes. And on the right hand side, we'll actually go to Rohit Sharma from the portfolio section.
Got it.
And you can actually see side by side what that one change did.
Okay. Wow. Okay. Great.
Yes.
Hi. Am I audible?
Yeah, go ahead.
Yeah. So I have a set of funds, which is inclusive of equity and debt. So when we compare it with the benchmark, which is Nifty, it is irrelevant for a debt fund. So if I add all that into one portfolio with the ISN, so it will segregate the debt fund and equity fund. Hello.
Hello. Yeah. So
Yeah.
firstly, if you run a portfolio with stocks and funds, and if some
No,
of the
not stock and fund. Only debt mutual fund and equity mutual fund. There'll be two mutual funds
okay,
altogether. And I have a set of funds like that. I have a client now like that.
yeah,
So he has got like 58 funds, and I want to remove that overlapping and check what are the common portfolios he is having and all.
understand.
And yeah, so segregation and all I want to do. So if I upload that portfolio here, can
Mhm.
it be segregated and give me a report accordingly? Like say for example, for equity I take Nifty 500 into consideration, and
Right.
for debt fund it will take automatically the benchmark, or what, how it will?
Sure. So we will show you. Yeah, Umair, let's just run. Yeah, with some debt funds. That's fine. That's enough, I think. Let's just run it. So basically, what we do is, firstly, when you run a portfolio, we automatically select a benchmark for you based on the underlying asset allocation. So if you look at the asset allocation tab here in this particular portfolio, you'll see that there's 81% equity and the rest is debt and cash. So as a result of that, we've chosen a particular benchmark for you, which is made up of 80% Nifty and 20% CISL bond index. So this is the automatic selection that we offer, but you're free to make your own benchmarks as well. So for example, if your particular client's portfolio, you feel that the benchmark should be created in a different way, you can actually go to custom benchmarks and you can click that button there, and you can actually create your own benchmark using putting any percentage allocation to, let's say you put 35 to CISL bond index, and you want to put the remaining to, let's say, Sensex or something, instead of the ones we've used. So you can add that, put 65 there, and then after that you can give it a name and save it. And once that's done, that custom index will be available for you at all times, and it will also be updated on a daily basis from the back end from our side. So this saving can take a few seconds. And once that's done, you'll see that you'll be able to make your own benchmark for that portfolio. And separately, if you want to create a new portfolio which only has the equity funds and a separate one which only has the debt funds, that you're going to have to do manually on your side. But you can see that you can now you just simply click on that new index, and now the portfolio will be running versus 35 CISL bond index and 65 Sensex. So you can actually create your own custom indices here as per your own requirements. But we've
Right.
also given you automatic indices in the ref index tab here, which start from 100% into Nifty, and then in 10% increments, it starts to put money into CISL bond index, and the last one is fully CISL bond index.
So here you are indicating that if I upload the IA signs of all the 58 funds here, it will
Yeah.
automatically allocate the benchmark and everything. I will just have to run the reports. Is it?
That's right. It will automatically allocate the closest combination, 70-30 in an increment of 10. So it will be either 60-40 or 70-30 or 80-20. So it will allocate the closest one.
So and how this overlapping and everything will work in case of it is a
Sure.
combined thing, then it will not work, right?
Well, see, the overlapping will still work. If you have a large portfolio,
Yeah.
what you have to do is all funds, what you'll have to do is once you run the portfolio, you can click the compare button here.
Yeah.
And when you do that, if there's 58 funds, you might have to kind of wait a little while.
Yeah.
Or you can load it from here as well, actually, once you save the portfolio, either from, if your client data is already synced, then fine. Otherwise, you can basically click that compare button, it will load it over here. And you'll be able to see like here what's done, what it's done. It's added all those funds in that portfolio into this compare list. And you can check the portfolio overlap here. And here the ones that have very high overlap will show in red or dark pink, and so on, as with the legend that's shown.
Yeah. So ठीक है, I will load this, and if I have any query, I'll get in touch with Umair, because it's like the client has done it on its own, and it's like 100 plus funds he has invested into, and we cannot like review it in a year, right? We have to switch it.
Yeah, I mean, with that many funds, you almost certainly get lots and lots of overlap. So
Yes.
you can easily do it here. And if you have any issues, you can also write to support@ngenresearch.com, and we usually reply quite quickly.
Okay, okay, I'll do that. I have that query only. So segregation and this thing. I'll do the,
Perfect.
yeah.
So there's another question. Overlapping of funds would work for debt as well.
I'm pretty sure that for debt, you know what, let's just clear the list and yeah, just load some debt funds and see. I don't think they work unless the ISINs come through. I'll have to sort of check.
Okay, just a second.
Okay, so what you can do is, yeah, check these. So some of these things, yeah, I mean, some of the debt securities will show, but generally with debt, yeah, so they will show. I mean, actually, what you can do is just clear this list completely, and just add two corporate or some corporate bond funds or something like that. Only thing is the bonds. Some of these funds are will have very, very different securities. So overlap is very less. So let's just check. We've got 8% over here. Let's see if that's cash or what that is. Just click on the 8%.
Just a second. I'm just adding all those others as well.
Perfect. Let's see what it has. So yeah, it looks like it is working. Yeah. I mean, if the ISIN code matches, then it will show the overlap. So you can see some of the debt securities that are actually overlapping between these two funds. But generally speaking, the overlap in debt funds will be quite limited. So that's just one or two securities here. But yeah, to answer your question, it does. We have a question saying, have you enabled CAS file upload for MF? So we do actually have one upload function already in the portfolio section. You can try it out. Generally, it works. The best one to try it out is the CAMS summary PDF. You can get this on the CAMS website. You can get it in the client's email and then basically upload it with the password here. So if you have any issues, please write to us on support@ngenresearch.com and we'll check it. But generally speaking, it works fine. We are, however, in the next couple of months going to be releasing a better version of this. But so far, I mean, people are using it and it seems to work okay. So yeah, just make sure that you order the CAS summary file, not the detail file. It has to be the file that only shows the latest holdings, not the one that shows transactions. That's the format. Sure. So for online resources, we have 2 or 3 places that you should definitely look at. One is the FAQ section that you can see on the top. We have answers to quite a few questions. You can just start searching, just like Google here. Rolling returns, you just type rolling, and you'll get answers to quite a few questions. Some of them are, have screenshots, but generally speaking, pretty straightforward answers here. So you can access this kind of knowledge base anytime you want. It's inside the application as we showed. The second thing you can look at is we actually have a video section which is quite extensive. It doesn't just it's got a lot of historical videos, which are basically these exact sessions that we just saw. All of them are actually uploaded here, so you can go through them. You might have missed some topics, etc. So you can actually go through these and watch them. Separately, we started putting in some of these really what we're calling NGEN shorts, and these shorts are basically less than 1 minute videos for simple, straightforward things like how do I do a SIP analysis, how do I compare rolling returns, etc. So it's a very quick explanation of things, and there are a couple of other videos also about general functionality. We are continuously adding new content here, so please subscribe to it so you can get a notification. Otherwise, you can always just visit it. And as we showed, if you go back to the application, the link to this page is always at the top, top right here. Or you can just search NGEN Markets on YouTube, you'll find it. And finally, we also have an updates page, which is basically a Twitter page. So you can, check this space out if you want to look at any new functionality that has been released recently. We are constantly updating here, either its functionality or just extra videos, etc. Does anybody else have any questions?
Yeah, hi Anurag, this is Atul here.
Hello, hi.
Yeah, I just got your mail also, but see, this CAMS data hasn't been uploaded since we got this RTS syncing, So
yeah, right. Yeah, so yours is an RIA case, right?
Right.
Yes. So this is something we're trying to get done. I mean, for the regular ARNs for distributors, we don't have an issue there. For RIAs, the good news is that the files data look like they're very, very, in fact, almost identical to the other files.
Correct.
So, so we are in the process of kind of properly releasing the RIA RTA connection, but it hasn't gone live yet. So, we are basically using your account as the test bed. And we did, if you saw the CAMS file upload there, it wasn't that we had released it, it's that it was the first successful test for the CAMS data.
No, but I don't see CAMS data over there. I only see Carvi data.
Okay, so I believe CAMS was uploaded. I will check.
It was uploaded. That's what but now I don't see CAMS data. I only see the Carvi data.
I think the reason is CAMS. There is a little checkbox called RIA that has to be checked while ordering. Correct. All our ordering is completely automatic, so we have to set it up in such a way that RIA box is checked during ordering. And I believe what has happened is when you don't check it for your account specifically, empty data comes in, right? And that is what's then wiped out your old data. So we're basically in the process of kind of getting that done. It's under development. So, but I believe it will be done quite soon.
Okay. All right. Because you see, without all these data, I'm not getting the complete feel of using the.
Understand. I mean, obviously, it will be very, very useful to have your client data ready for analysis.
Correct.
So I don't think there'll be any issues. We have some issues with the Microsoft email right now, but as soon as that is sorted, we'll get back right on the RIA integration.
Okay. So can I expect it by next week as well?
I hope so. Fingers crossed. It's just this Microsoft issue is pretty urgent. So as soon as that's solved, we can get back on it.
Okay. All right. Okay.
Thank you.
Thanks a lot.
Does anyone else have any questions? Okay, if there's nothing further, then maybe we can close for today.
Okay, so thank you so much, everyone, for attending this session. We will meet again next week, same time, 4 o'clock Friday. I'm writing this mail again on the chat box, support@engineresearch.com. If you have any queries, you can just write us up and we will definitely reply you back. and keep attending such sessions. It motivates us to create more content for you guys, so that we can add in more videos for you, so that you can check our video section as well. And we are in a process of also making couple of more functionality videos in the video section, so that will be added soon enough in the system. You can also check this functionality videos to add the point, and that is how this works out. So thank you much, everyone. Have a nice weekend. Let's catch up again at 4 o'clock. Thank you.